Hello traders, welcome back to my YouTube channel. Thank you so much for clicking. Kindly remember to subscribe, like and comment down below. So what is liquidity? So today we're going to be defining or giving a simple explanation of what liquidity is all about. So in simple terms, liquidity is a measure in which we can buy or sell a currency at a particular price. So liquidity is split into two categories. We have buy side liquidity and sell side liquidity. So when I talk about buy side liquidity, what I mean is this is liquidity that rests above the market, usually at old highs or relative equal highs, where smart money will pair this liquidity with their sell orders once it is taken out. So for example, if you have let's look, I think, at buy side liquidity first. So if you have, so this is an example of buy side liquidity. So for example, if you have a market that was initially dropping and then it started rising higher. So when this high, so that's what I was saying, buy side liquidity is an old high. So this old high, above the old high, we have buy side liquidity. Essentially, we have stops that were placed there by some traders that the market will seek to take them out and then sell. So if this market wants to sell from here, it first has to come back up, take out these old highs, which will have stops right here, and then now it will sell to seek discount prices. So that's essentially what buy side liquidity is all about. So buy side liquidity will be used to take out stops that were placed above a high or relative equal highs, and then the market will go in the opposite direction. So that's how the market moves actually. So if you look at now sell side liquidity, so sell side liquidity is just the opposite of buy side. So I'll define sell side liquidity as, this is just liquidity that rests below the market, usually at all lows or relative equal lows, where smart money will pair this liquidity with their buy orders once it is taken out. So actually, what I mean by that is, once, for example, this market was coming down initially, and then this market, if the smart money wants to take this market higher, what they'll do is they'll take out sales stops that were down below here. So we'll have stops. There'll be people who will have placed stops right here. So smart money will come and take those stops and then reverse the market. So it was initially selling, so people were just selling. But when the market now wants to reverse, so actually there's a support area here. I think there's a fair value gap here some few weeks ago. So you can check your chart and look at that support area. So it's not just anywhere. You have to have a reference point in which you are looking for sell side or buy side liquidity. So in this case, this reference point was an old support area. So in terms of institutional support, we'll be talking about a fair value gap or an order block. But in this instance, this was an fair value gap right here. So you can go through your charts and just check on that. So once it takes out that sell side liquidity, we see the market now run away from that level. So look at how aggressive it runs away, and even it leaves an imbalance right here. So this imbalance shows how much the sponsorship is in terms of institutions now coming into the market and now supporting that idea of buying. So another example is right here. So the market initially was dropping, but now if it wants to now reverse and go higher, it has to now take out all this. I'll actually say these are relative equal lows that were taken out, and then the market now reverse. So there will be stops resting below here. So these stops will be taken out, and then the market will reverse. So essentially, that's how you trade liquidity, or that's what liquidity is all about. So for instance, when this market now started going higher, we'll have actually buy side liquidity above this high that will be taken out, and then the market will retrace and then resume again. So this order block will hold prices higher because we have already taken out liquidity from down here. It doesn't need to come back again and take out another level of liquidity. So actually, I will say, guys, that that's what liquidity is all about. So actually, I think that's it. So liquidity is what moves the market. So apart from liquidity moving the market, I also believe that the market also moves to rebalance. So for instance, such a level like this and this one. So you see the market will always move for liquidity or imbalances. So the market will move in two forms. It will either move to take out liquidity or pair orders with available liquidity, or it will just move to rebalance an inefficiencies that was left in the market in form of an imbalance or a favor lookup. So I think that's it, guys. Thank you so much for watching. Thank you so much, guys, for watching. I hope this video has been helpful. If you enjoyed this video, don't forget to like, subscribe, and comment. Also, let me know what kind of content you want to see or any suggestions you have. Thank you.